All right, great. Okay, so let's begin. Okay, we should be seeing the PowerPoint right now. If you don't, let me know. So today we're going to talk about the RSI, okay, Relative Strength Index, and we're going to, skip the basics and just start to talk about some advanced applications of the RSI. Before we get started, let's read this disclaimer. Information and opinions contained in this webinar are for educational purposes only and do not constitute trading recommendations. Forex trading involves a substantial risk of loss and may not be suitable for all investors. That's why we learn about the markets and try to get on the right side. That's pretty much what we try to do. About me, okay? My name is Fan Yang, and I'm a commodity trading advisor, chartered market technician. These are just designations. What I consider myself is basically a student and observer of the market. Okay, I'm the chief technical strategist at FX Times, where I also provide webinars in a Power Course and the Charters Corner. Now, I have those weekly, so if you don't have any FX Street events to attend to and you're interested, make sure to come to my website, FX Times, and register as a member. You get free invitations to these weekly webinars. Okay, and I also do periodic webinars on FX Street, such as this one. All right. Okay, so I skipped a little bit ahead. Okay, so RSI basics. I'm going to just talk briefly on the basics to make sure everyone's on the same page, and then we're going to continue from there. After showing some slides, I am going to switch over to the charts, live charts, and we're going to take a look at some live examples focusing on the RSI. So if you have any requests for any pairs, you can let me know as during the second half of this presentation. Okay, so RSI, for anyone, I'm assuming most of you probably know what that is, have used it. RSI is basically an oscillator. An oscillator is one that goes is up and down, oscillates up and down between 100 and 0. It never actually gets to 100 or 0, but it basically reflects the momentum. So if the momentum is bullish, you'll see the RSI start going up. If the momentum is bearish, the RSI will start coming down. Okay. And the basic interpretation that we learn when we first learn the RSI is basically your oversold, overbought levels. You're over 70, you're overbought, and you're taught that the RSI that it's showing bearish. There's a bearish signal there when the market comes back down. And here, when the RSI is below 30, there's a bullish signal when the market starts to rally from this low. From these lows here. Okay, that's the basic interpretation. Also, you have your neutral at 50. Okay, a little bit more advanced are your bullish and bearish divergences, which I will show in the next couple of slides. But hopefully, we all know these basics: the oversold, overbought levels, and basically neutral, and so that we can start building more interpretations and applications. Okay, so 30 and 70 are our basic levels of oversold and overbought. But there's a misconception. A common misconception is that when the RSI rises above 70, it is time to sell, and it is below 30, it is time to buy. In our previous example, we did see that here, for example, the market did reverse when the RSI rallied above 70, and when it came back down, that represented the market reversing. But that's not always the case. Even in the example on the left here, the left side of this example, we see that the RSI dipped below 30 here, but we continue to dip lower, and the price level also continued lower. So just because the RSI is below 30, that does not mean the market is ready to rally. Okay, so that's a misconception, and we need to unlearn that. Okay, and we see that as soon as we start applying this to the market, we start seeing that, and we should all realize that already. Okay, when the market reaches above 70 or below 30, it is actually a sign of strength, either bullish strength when it goes above 70, or bearish strength when it goes below 30. In the near term, we may have a sign that the market needs to pause, as it is in the near term an overbought or oversold signal, but that doesn't always translate to a reversal. Divergences help improve the probability that a top or bottom is forming, but can also be followed by continuation. So our basic interpretation of oversold, overbought, of looking at divergences, which here we have some examples here of bearish and bullish divergences. These basic interpretations do not always work in the market. In fact, you'll find that more often than not, they are not going to work. Okay, here we have a good example of ones that did work. You see the RSI here made a lower high. Well, your price high made a higher high. That represents a loss of momentum, and when the market came back down, when this RSI also continued lower, that represented a bearish a reversal from this previous rally. Here we also made a lower low in price, but your RSI made a higher low, and that's a bullish divergence. This euro dollar, as we see now, has been rallying since then. So we see this as a successful application of RSI, of the divergence signal. On the right side, we see a failure because the market continues to decline here. Your RSI made a higher low here, and the RSI turns back up, but your price continues lower. It just continues lower even when you have divergences. Okay, this is an extended bullish divergence, and it shows that the market can stay within overextended or overbought or oversold conditions for a while. Okay, and it's not until this RSI came back up, even here the RSI was not, the price action did not reflect reversal just yet. Okay, so as a tool for a range trader, the RSI loses that luster, that usefulness. But it might be more useful as a trend following tool. Okay. First of all, I want to mention that, the 14 period is the conventional period, and there's been a lot of tests that uses that period, and all the signals that we talk about are for that parameter, the 14 period RSI. Okay. Before going forward, I just want to recap a couple of names that you should know when dealing with the RSI. J. Wells Wilder was the creator of the RSI indicator, and Andrew Cardwell is the contemporary RSI guru. These are a couple of names that go basically hand in hand with RSI. Okay, and moving on now. So we learned that bearish divergences, bullish divergences improve the probability that we found a top or bottom, but we see that many cases where the market continues to extend further even when the market is overbought or oversold, according to RSI. So instead of using it as a range trading tool, we should use it as a trend following one. In the trend following approach, the levels 40 and 60 are boundaries for your bullish and bearish trends. So in the bullish trend, the RSI should stay above 40, and in the bearish trend, the RSI should stay below 60. Okay, we're going to explore that in a moment. There are also positive and negative reversals to look for. These are different from your bullish and bearish divergences. These are actually trend following signals that suggest continuation of the previous trend, whereas your bullish and bearish divergence signals are reversal signals. Okay. And finally, just want to note that all these applications, all these approaches and methods are applicable to all time frames. All right. So let's talk about the 60 and 40 levels. Okay. As I mentioned, the bearish trend should see the RSI remain below 60, while bullish trend should see the RSI remain up. My mistake here. I should revise here. It should say above 40. So bullish trend, the RSI should stay above 40. Please excuse my typo here. Okay. And here's an example. Dollar yen daily back in 2007 and 8. This decline here was confirmed as your RSI. Well, first of all, your RSI to the left of this chart, okay, the dollar yen has been rallying a bit, and your RSI here broke above 70. Okay, and here the RSI came back down below 70, and when it broke below 30, okay, that's actually a bearish breakout, momentum breakout signal. So maybe in the near term, that break below 30 is a bullish signal. In the near term, you see the market in the near term did in fact flatten out and even attempted a bullish run here, very, very weak bullish attempt, and then the market continued lower. So in the near term, we did get a pause, did get a bullish attempt. Okay, but as we see, that's not the most significant move in this pair during that time. And when the RSI came back down lower, we saw the price level also come down lower. So that's confirmation of your bearish momentum breakout. Okay, and that means in the intermediate term, we should be bearish. Now here we had a correction. We had the RSI rise above 30, and here we failed to come back down below 30, and in fact we are rising here. The price level continues to rally as well. Okay, there are other signals here I'm going to talk about later, but what we're following right now is the RSI as it hits 60 here. Now when I say it should stay below 60, that doesn't mean it can't tag it, it can't crack it. You'll see a lot of cases where the RSI does crack 60, but if the market brings it right back down, that's a good sign that we're still in the bearish mode. So we had this RSI crack it and come right back down. And when the RSI here successfully broke back below 40, remember 40 is your support in the RSI for the bullish trend. So the ability to break back below 40 is important as well. So this 3 points of RSI action is a bearish continuation signal. This first one here with the ability to crack below 30 for the first time is your first initial bearish momentum breakout. Your inability for the RSI to crack or to sustain a break above 60 is confirmation that we have topped off, that the bullish trend is no longer, actually this here already showed that the bullish trend is no longer valid. Here we showed that the bearish trend is in place because the bears are now in control, keeping the momentum below 60, keeping the RSI below 60. Okay, and when the market then cracked below 40, that's a sign that the market is continuing south. When it cracked below 30, that's further confirmation of your bearish momentum. Okay, so, excuse me. Sorry about that. And as we continue, the RSI continues to fail a break above 60. Here we broke above 60, but it failed to sustain it. It came right back down. And here, although we failed to break below 30, okay, the subsequent RSI failed to break above 60 and then was able to dip below 30 again. So the RSI in this scenario, in this example, reflected the bearish price action. Okay, the RSI confirmed your bearish continuation throughout. So 40 and 60 are important levels to look at. That was an example. I'm going to go to the charts later so we can get plenty of examples and practice. Moving on now to another advanced application of RSI. Okay, here we have what's called a positive reversal in this example. So after the RSI has broken to the upside above 70, see, that itself is a bullish signal in the intermediate term. Like I said, in the near term, that might be a bearish signal, but in this case, we saw again, even though there was a bearish attempt, it was very insignificant relative to the move we had. Okay, so here we ended up with, so let me finish the definition of this positive reversal. So after you have your bullish breakout, you see your RSI coming down, creating lower lows. If you have a lower low in your RSI, but a higher low in the price level, that's known as a positive reversal, and it suggests a swing projection as such. You use the previous swing here that corresponded with this RSI swing. So it was this over the span of these 3-4 days. And then you see here when the RSI here turned back up and your price level failed to make a low below this previous one and breaks above that recent consolidation, then you have a bullish continuation, and you use the swing from the previous swing here, project it to the pivot here, and you have your bullish projection or bullish target. Okay, so this is a bullish continuation type, trend continuation type of signal. The essence of the signal is basically saying we are, the momentum did slow down a bit, okay, but it's not enough to push the market down. There's still further bullish momentum that has yet to be resolved before a possible top. Okay, so that pretty much is suggesting another wave in the direction of your trend. So it's not, it's not a reversal signal where you're basically looking for the market to swing from one point to another. This is pretty much the market has already gone in one direction, but there's further a momentum in that direction, and here is a signal. Okay, so you're only catching part of the trend, but that's what trend following traders do. They're not trying to catch the entire trend. Pretty much, we're trying to catch the middle part of it. Okay, so we're gonna forego part of the trend because we need confirmation that the trend has started. And here, this is pretty much confirmation that the trend hasn't ended yet and needs to continue further before topping. Okay. Alright, so that's the essence of a positive and negative reversal. You can imagine a negative reversal is basically when your RSI makes a higher high, but your price high makes a lower high, suggesting further bearish attempts. Okay. And finally, we talked about divergences before, but what we should really look at are extended divergences, because they usually match a top formation. Okay, this is actually the euro-dollar, the current euro-dollar situation, where we had this possible diagonal triangle topping situation with this extended RSI. Okay, but we had this failure to break this important pivot here, and this pair remains bullish. Your RSI here failed to break below 40. Remember, we talked about when the RSI breaks above 70, that's a bullish signal. Okay, so we had some near-term bearish, that's a near-term bearish signal, and we did get this slight decline. But in the larger scheme of things, the market continued to rally, and we see continuing bearish divergence, but your market continued rallying. And here, even when the market broke below the top, the support here, okay, your RSI did not break below 40, so there was no momentum, there was no bearish momentum, or there was no loss of bullish momentum in this example. And when the RSI broke back above 60 and is no longer in this divergence anymore, then this is a bullish continuation signal. Okay, and this is about to tag 70. Very likely it will. This market has further to go. Okay, the euro dollar. All right. Here, I want you guys to look at a possible positive reversal here. First of all, I want to know if you guys can spot a positive reversal within this topping action. Within this, I shouldn't say topping action because it hasn't actually topped off. So within this diagonal triangle, we do see a positive reversal. Okay. Now, look at the RSI. You'll see that during this extended divergence, you had this positive reversal. I'm not sure if you guys see the pointer. I hope you do. You see this RSI low here followed by another RSI low. Can you guys confirm that you can see this pointer? If not, I'll go to my charts. Okay, so you saw a lower RSI than your previous one. Okay, but your price RSI is higher. Okay, now I didn't draw out the swing projection, but it would have been this, this, and this. And we had this last week when we were at the FX Street's monthly webinar. We were talking about the euro dollar actually, and we saw in the 4-hour time frame that we had a upside risk towards 1.3820, 1.3830 area using this positive reversal signal. Okay, the market has since, well, first it attempted to invalidate that, failed to break below these important pivots. It broke below this but didn't sustain the break, and the market continued higher. So now we're still in that positive reversal. We satisfied our positive reversal signal at 1.3820. But now we have another positive reversal signal as the RSI made another lower low here as opposed to this low, but your price low is much higher. Now using this swing projection, there's two swing projections here. One using the most aggressive one, another using this one here, which is this low here. Okay, and you have two projections, one towards 1.41, one towards 1.3925. Now, these swing projections are not based on are just that, swing projections. You are considering the target. You have to consider other factors as well. You have to consider your wave ratio analysis. For example, if we look at this wave, 1, 2, another wave up, and then we might not expect, we might have to expect this wave to be a lot shorter than this middle wave here. Okay, so maybe this aggressive wave projection is a little bit too aggressive. Okay, we have to look at other resistance factors as well, like retracement levels. Okay, swing projections. I just looked back at the chat here, and I see that we have some questions. I'll address them very soon. But the last question we had was, what are swing projections? That's basically using a rally before the strength of a previous rally and projecting it to a pivot to start the next rally. So this green line here represents the same strength as this rally. This maroon or brownish line here represents this swing here. Okay, a smaller swing projection. All right. Okay, so those are some examples. All right, I'm going to go to the charts now and look at a few more examples, and then I'm going to open it up to you guys for any questions or for any or to look at any charts. Okay, so Give me a second here. Alright. Okay, so now you should be seeing my euro dollar daily chart here. Okay. Boyke waves, you mean EW? No, I'm not talking about specific counts, Elliott wave counts. When I talk about swing projections but you're right. Oh, okay. I think you're talking about the ratio analysis I was talking about before. Yes, when I talk about ratio analysis, I do mean Elliott wave. I am thinking in terms of Elliott wave principles, where if you have a 1, 2, 3, 4, 5 type of wave, your fifth wave should be shorter than your third wave. Okay, that's not the scope of this lesson, so let's move on. We're going to focus on the RSI here as we look at this euro dollar daily. Okay, I think we saw this example, this positive reversal example. Okay, and let's continue actually. This market continued to provide you with positive reversal signals, right? You have your RSI here, then you dip lower, but your price level is higher. So what you could do, and again, this is where the swing projection comes in. You have this RSI swing up here. Now match that RSI swing, okay, with the price swing, and you went up all the way here. Oh, okay, from this low here. I'm going to delete the previous ones. Okay, so now you have this swing. Sorry about that. You have this swing now. Okay. See, I'm being a little conservative and not using the entire swing up to here. Okay, but you can also do that. The reason is because the RSI here topped off, and I wanted to match the top here with the price top. Okay, so that would have been here. Then you project it to your next pivot. So initially, this was our pivot here. Yes, that's our lowest pivot, so this is where we project it from. And when we had this candlestick action, that started the bullish continuation. Okay, and this would be your swing projection. Okay, so do you guys, or for the I can't see the full name here, but I hope that answered your question as far as how to do the swing projection for your positive and negative reversal signal. Okay, let's keep moving. Okay, so I want to show here a bullish divergence, right? Then your price it still gives you a negative reversal because your RSI created a higher high, but your price high is lower. So here you'll see that this is a failed example. For any type of signal, there is no signal that's 100%. So, okay. So you see what happened here. The market, with this candlestick coming down, showed that it was not ready to reverse just yet. And it suggested the market should rally at least to these lows and maybe even crack it. Okay. Now, price action did not do that. The market continued higher, and here we broke above these highs, so that no longer is valid. That negative reversal signal is no longer valid. And your RSI eventually here broke above 60, invalidating the bearish trend. Now we still had some sideways action, we still had some bearish attempt here, but the market has turned sideways. Okay. Alright, so that's the euro dollar Okay, let's go to the pound dollar. Okay, and just going back in time, looking at the RSI. Okay, we see that. Okay, so during this rally here, the RSI remained mostly above 40. There were times when it cracked below 40, but it failed to break below 30. Okay, now it tagged it a couple of times here, and just looking at the RSI, we saw that the RSI bullish breakout became lower. And when you look at the momentum shift like that, that's building up a long-term reversal. Okay, it might not be it's not a quick signal at all. It's more of a signal that the market is setting up for a change in momentum, because we saw before the RSI here broke above 70, way above 70. It came back down, fails to sustain a break below 40, and here on this break above 60 here, we have signal of bullish continuation. Now this pair was very choppy, as the RSI reflects. Okay, now back after 2008, we started to decline, right? We had this bearish breakout for the first, this RSI has not broken below 30 in this whole period. Yes, this is the 200 moving average I have here. And also, the RSI, I like to put my 3-period simple moving average here as well, just to smooth it out. When I talk about the RSI turning, it requires the RSI to break below that moving average. So for me, that helps me define when the RSI is turning. Okay, and this is the 200 moving average. It's a moving average that institutions use, and I look at, but I don't use it as for example, here some might have used this as a crossover signal, and that would have worked out very well. There are other signals that could have came from here. For example, here you had this bearish divergence to start with, and then you basically had the first lower high in a while, and that would have been your first signal that the market has topped off. In any case, moving along with the RSI here, it dipped below 30, came back up, failed to break above 60, and broke back below 40, and also broke back below 30. Now, there's a bunch of, or I should say there's an extended divergence here, right? But look how long it took this market to actually turn back up. Okay, it took until March to find a higher low in 2009, when this basically began. Actually, your divergence basically began September, the previous year. Or I should say it began here in October, after you created these two lows and your RSI was already starting to rise. Okay, now you have further negative reversal signals here, which should tell you that we're not done with this bottoming. Okay, and it should warn you that we are in the process of bottoming, but there's some further bearish momentum to deal with. So let's look at this first one here. Okay, the RSI here dipped below 30 again, came back up. So here's our first negative reversal. Okay, and again, I'm going to show the swing projection. Here you had the RSI dip down here, corresponding to this move in the price action. Okay, and now using that same swing, the same strength, we project it to the next to our pivot here, when where the market reversed. Okay, so that would be your swing projection. Okay, we did miss that though. Here's another one. Actually, the market, when the RSI here broke above this RSI, that previous swing projection is invalid. Okay, but you see the RSI did not break above 60. Price level did break above this, but upon the break, there was an immediate reversal. Immediate, although it's 2 days, basically there was no follow through, and then the next 2 days showed a reversal. And at this point, you could use that pivot. Okay, this swing down from this pivot. Okay, and you continue. For example, you continue here to create another. I should use this one here. Another negative reversal. Okay, and this is another one that failed, but there was definitely a bearish attempt. Okay, there was a bearish attempt, and this market failed to make another low. All right. Now see, with the failure before, we saw that the market did make another low, or did it? It cracked this previous low. It didn't close below the previous low, but here it was very different in that it didn't break the previous low. And upon a higher high here, and upon your RSI breaking above 60, you should invalidate your negative reversal signals. So negative reversal signals are good, or positive reversal signals and negative reversal signals are good right after the market shows you a bullish or bearish momentum breakout. That's when, right here, when the market starts your bearish momentum. Okay, first you have confirmation that the RSI doesn't break above 60. Okay, now when you start to see your negative reversal, it's still fresh. You're still at the beginning, or at the initial stage of this trend. So that if there is further trending, it should continue. But you see, at the end of this, after this extended divergence, your negative reversal signals and bullish reversal signals will not work as well. All right, so it's important to catch your reversal signals early. Okay, here's further examples, and you're going to see that it's not, this signal is not a perfect signal, obviously, and the targets have to be adjusted. It gives you a suggested swing projection, but you have to take other things in account. All right, so let's see what else we could take into account. For example, here we have this negative bearish divergence, right? The RSI here comes down lower. What you have here is, cracked 40, but it came right back up. Your price level was higher, so again, you have this bullish positive reversal signal, suggesting we're not done with this rally yet, and we have another attempt here. Okay, this is a failed attempt. The RSI failed to sustain a break above 60. Remember, that's always going to be a confirmation you need, and the market continued lower. All right, you're going to have to deal with a lot of these false signals. Okay, but again, if you look at this more carefully, you should be able to catch a more earlier positive reversal. Okay, the earliest positive reversal occurred here when so RSI broke above 70, came down, and then here tag 70. It doesn't have to, but eventually you may come back down and make this lower RSI low while your price low is a bit higher. So you know that you would probably have another swing as such. Okay. The second time around, it didn't work. Okay. All right. Let's see if we have some further examples here. Here's the 1 hour time frame of the euro dollar. Let's actually go to our current time frame and see what's going on here. Okay. I'm going to bring this back a little bit. You'll find that during this rally, okay, first going back to January 7, 8, 9 here when this rally started. Yes, this rally started, and here we have the RSI break above 70. RSI gives you a low. RSI comes back down here, gives you another low, much lower than the previous low. Okay. And basically you would have had a bullish signal as such. Okay. Now in this example we saw the market reverse a bit first. The RSI actually broke below 40. Okay. But you see price action was very, very contained. And I'm refraining from using other technical tools right now because I want to just use RSI, but there are other signals that this market was pretty much just correcting this rally. And upon a break again above 70, you see this RSI didn't break below 30, but did again break above 70. You had this continuation. Okay, so let's see, there's another one here, another positive reversal. Okay, you have your rally swing, and if you project it to your next one, you're over here. During all this time, what you are witnessing is an extended bearish divergence. Alright, continuing. Here's another, the RSI broke above 70 again. That starts a new round of bullish attempt. Here your RSI cracked below 40 but did not sustain, making another lower low. Your price low here was higher. So here again we have another bullish or positive reversal bullish signal, and so forth. Now the RSI again breaks above 70, so the euro dollar is looking very strong at the moment. And well, we don't have a positive reversal here, but we did see it in the 4-hour time frame. Okay, as we've shown before in the slides. Alright. Okay, so I'm going to look at some of these questions. Okay, so one interesting question is it not true that trend line can help to determine the momentum break both to downside and upside? The trend line will give you a break in price levels, but it's not a momentum break. For example, you have a trend line here. Okay, and when the market here broke above that trend line, it showed that the market broke above an important, I wouldn't call it momentum. It broke the trend. It's no longer at this speed anymore. Okay, you will have times when you break your channel and pattern, but your RSI fails to confirm the breakout in momentum. Okay, in this case, we did break to the upside. Now the RSI here did break to the upside. Okay, and there was a break in momentum. And therefore, after this decline, we had bent this trend sideways. Okay, and it's actually a very bullish scenario in this situation here, as the RSI stayed mainly above 40. But at the start of the year, we had this big dip here, and this was very, so this behavior is not something that, that represents what we should have seen from earlier, but the market is always right. So what we projected from this earlier RSI momentum was completely reversed at the start of the year as the market dipped all the way down here. And in fact, this is a bearish signal. As I mentioned, a break below 30, especially with such a break, is definitely a bearish signal. But again, this is one case where the market completely reversed that bearish signal right away, and we had to we are in basically a correction against the decline that started in November. At the moment, see, the positive reversal should not be, you shouldn't confuse that term with a reversal. I'm not saying that the market should have a reversal from this rally. A positive reversal actually suggests that the market should continue higher. Okay, a positive reversal where your RSI is lower, okay, but your price flow is higher, and here we have two swing projections, one to 1.3925, one to 1.41. But we know if we use the Fibonacci, this is another lesson, but I guess just to be more specific on the target at the moment. Okay, you see we broke above 61.8%. The next target could be then the 78.6% level, which is at 1.3975. Okay, so you would have to resolve your own method of targets here. You could probably use a mixture of swing projections and Fibonacci projections. You could average them out. There are many ways to do that. I'm not claiming that this is the only way. Okay, so euro dollar, RSI looking bullish, projected towards 1.3975. All right. Now we have about 12 more minutes, so I want to open this up for any questions or if you guys want to look at any currency pairs with the focus of the RSI, I'll do that too. Okay, so while you think of any questions, I want to finish up with a summary. The RSI can be more effective as a trend following tool rather than your basic range trading approach. Another important note is that we should use our other tools as well. Now, I didn't show that today. I didn't combine the RSI with other technical tools, but you should always use a combination of technical tools when you look at the market. Okay, so we have a couple of requests. Okay, I'm just going to jump to the dollar Swiss here, straight from this chart. Okay, so here we are in the 4-hour time frame. Let's start in the daily time frame. Okay, let's actually go all the way back to the weekly. I want to see if there's something interesting here. Okay, so the weekly time frame shows this RSI below 30, above 70, below 30, above 70, below 30. So historically, the RSI in the weekly time frame confirms sort of the sideways action, but very volatile. Okay, so you saw this type of sideways action, but a very large type of sideways action with very huge swings. Okay, so let's go to the daily. The RSI here is very bearish, but we are developing a bullish divergence, so we are probably in the process of creating a bottom in the long term, or in the next few weeks. For now, though, the market continues to look bearish. The momentum here had most recently broke below 30, and RSI is heading back south, so it is bearish. Okay, let's look at the daily time frame. Daily time frame RSI shows an extended divergence, and actually this is where we have a negative reversal signal. Okay, Now, I don't really like that this broke above 60, but I like that it came back below 60 right after breaking it. Okay, so that's 60 right there. Okay, so that's 60 right there. Okay, and you see the RSI making a higher one, but your price high is much lower. Therefore, you could use this swing projection. But once again, you don't always use the same swing projection. When you look at this, you have one swing down, second swing down, and this is your third swing down. Maybe we shouldn't expect it to be just as strong as the middle swing. Maybe we can expect it to be 61.8% of the middle swing. Maybe we could use the first swing down here, which is actually pretty close, still pretty strong. Okay, you could use all types of wave projections. For example, here you have another swing projection here. Now, do not you don't have to take the swing projection provided by the negative reversal. The negative reversal basically tells you that the momentum is still bearish, and you have to use other tools other than your this swing projection to give your target. It's just one of the suggested projections. Okay. All right. So dollar Swizzy looking quite bearish, although we might be in the context in the longer term to be creating a bottom here. Okay. So that's daily. Maybe one more in the 4-hour time frame, and we'll take a look at dollar CAD. Okay. So in the 4-hour time frame, the bearish mode has not been confirmed yet, although your bullish mode has already been invalidated as the RSI broke below 40. Okay, let's see. There's we don't really have an RSI signal here. Okay. All right. So that's the dollar Swizzy. The outlook is in the intermediate term. There's a bearish outlook, but again, we need confirmation with the price breaking below this here at 0.93. Then we're looking at lower targets. Okay. Let me move to dollar loonie. Just give me a second. Okay, so the dollar loonie has been very choppy. I mean, if you look at the weekly time frame, in the last year, this is 2010, here, pretty much sideways action until the fourth quarter here, starting in September, end of August, we started to be in this bearish trend. Although in large context, we are still sideways. And if you look at the RSI here in the daily, you see that there is bearish bias as the RSI broke below 40, but it's not a very bearish move as the RSI remains above 30 still. So looking at the RSI, we're pretty much ranging with a bearish bias. That's what the RSI tells us here. And again, your price action could already tell you that. Remember, price action is always should always be the first thing you look at. Your indicator should help to confirm. Okay. So that's the weekly. Let's take a look at daily time frame. You see the daily time frame is also a little more bearish. Here you have a little tag below 30. Here you have a rally failing to break above 60. If it breaks back below 30, that's your bearish continuation. Now here we didn't have the market, it didn't have the RSI before break below 30. Okay, so we can't really use this negative reversal, although I have seen this type of swing projection as well. Now, I would say this is not as strong as one where your RSI before had dipped below 30, because when it dipped below 30, it represents a bearish momentum break. So we didn't have a bearish momentum break before, okay? So it's not as strong as what our other negative reversal signals we've seen, but nevertheless we can treat it as one. And if this continues lower, we have a projection towards the 0.97 area. All right. We know that in 2008 the lows were 0.9750, so maybe we would revise it a little higher. All right. 4-hour time frame. So you see a very choppy pair. Again, dollar Canadian in ranging mode, not getting a lot of our trend following signals in the RSI. Okay. Although let's take a look at this one here. Again, you have this bullish divergence, then that created your RSI high here, then another RSI high here. Normally, that is a negative reversal, right? So let's take a look at that swing projection. It didn't work out, as we see. Okay. We did break a lower, create a lower low, but the market failed to go all the way towards 0.98 with this swing projection. One thing I don't like about this is your RSI did break above 60. So maybe for one of your filters, you could make sure that the RSI, the first one at least, doesn't go above 60. The second one, maybe you could allow it to go above 60 slightly and come right back down. Okay, so again, you have to use this in conjunction with your 40 and 60 longs. All right. So dollar loonie, basically very bearish. Not very bearish. I'm sorry. It's showing bearish bias. Not very bearish. It's in a ranging mode, but showing bearish bias. All right. Okay. Let's see. Are there any other pairs we want to look at? Maybe, let's see, we looked at the euro though. Maybe I'm trying to think what's ranging, what's trending sharply at the moment. Okay, so let's go to pound yen. I remember a positive reversal signal spotted earlier. This is 4-hour time frame. So yes. Okay, so this is a few weeks ago. We were over here, had this bullish divergence. Okay, we had a failed negative reversal signal. Okay, so one thing you might come out, you might say to yourself is, hey, how come there's so many failed negative reversal signals? Why am I even looking at this? Well, when we look at the negative reversal signal and it fails, and the price action fails to break below the previous low, you have to be nimble enough to switch and say maybe that's a bullish signal. That the failure to continue the bearish signal is in fact a bullish signal. Okay, so this is one of those cases where we basically created a head and shoulder bottom here, and the market rallied. All right. In any case, I hope today's lesson was informative. I hope we look at RSI with our trend following approach, looking at the 40 and 60 levels as well as positive and negative reversals. All right. So that's it for today. Good trading to you. You can always catch me at FX Times, and I see that Nick provided some of the articles just to dollar Swizzy, maybe dollar CAD. In any case, that's it for today. Thank you guys for attending. Hope to see you again when I do more webinars on FX Street.